So Tesla has been on a tear lately and is up over 500% over the past year alone. So why is Tesla stock up so much, and what is driving the optimism surrounding Tesla stock right now? Are shares topped out at their current price, or could we see Tesla stock break $2,000 a share sometime soon? Those are some of the questions we will answer in this video. But first, if you haven't done so already, make sure you subscribe to my channel. I cover growth stocks such as Tesla, Shopify, Square, and a lot of other great growth stocks you probably have never heard of before. And using this method of investing, that is buying and holding these high growth stocks, I have been able to outperform the market over the past 10 years. So click that subscribe button and let's get into the video. So there are three big catalysts that have been driving Tesla stock over the past 6 months. The first one is profitability. The second is China, and the third is their technology. Now, the first one is probably the most important factor because people don't like investing in companies that lose money. In fact, a business that consistently loses money isn't really a business at all. It's an experiment. And that is how a lot of analysts and investors have viewed the company from 2010 to 2018. Tesla was Elon Musk's big experiment with electric cars, and there was no guarantee he was going to be successful with it. Tesla was losing hundreds of millions of dollars a year. Their cars were expensive. They were impractical. There was nowhere to charge them. Oh, and did I mention they were losing hundreds of millions of dollars a year? But all of that changed in September of 2019 when they posted a surprise quarterly profit of $143 million, which, if we look at the stock chart, is really the point at which Tesla stock took off. And things kept getting better for Tesla from this point forward. 3 months later, in December of 2019, Tesla posted another surprise quarterly profit of $113 million. And yet again, 3 months after that, Tesla squeezed out a $16 million profit for Q1 of 2020. And this string of profitability was important because it signaled to investors that Tesla was starting to become a legitimate business. Demand for their Model 3 was soaring, their profit margins on their cars was getting a lot better, and Elon was proving that this was no longer an experiment, but rather a sustainable business. Get it? Because they make electric vehicles. Okay. Also, when a business makes consistent profits, the risk of investing in the business goes way down, because the risk of bankruptcy also goes way down. So over the years, more and more people were discovering Tesla and were even wanting to invest in the company, but couldn't because the risk of bankruptcy was too high. And bankruptcy was a real threat. In fact, Tesla almost went bankrupt as recently as 2018. So make no mistake, up until Tesla began turning a profit, the stock was a very risky investment. This is how I personally felt about Tesla up until as recently as last year. I didn't buy any shares of Tesla until January of this year when they crossed $500 a share for the very first time. Because while I liked Elon's vision and knew Tesla was capable of doing great things, I couldn't risk losing my money. And I am sure I was not the only one who wanted to invest in Tesla at the time, but couldn't because of the risk. But now that Tesla is on the verge of reporting its fourth straight quarter of profit, a lot of the risk has been taken out of the stock. And the 4 straight quarters of profit is a big deal because it would allow Tesla to be added to the S&P 500 index. And a lot of index funds that track the S&P 500 would be required to add Tesla to their funds, which would give the stock price a big bump. So profitability has helped Tesla tremendously, but it is not the only reason for the massive run-up in Tesla's stock price. The second reason is China. And I covered this in another video I did on Tesla not too long ago, but the opportunity in China for Tesla is huge. US consumers buy roughly 17 million new cars each year, but in China, new car sales reached 25 million last year. On top of that, electric vehicles are being highly incentivized by the Chinese government to help combat air pollution. What this means is that over the next few years, Tesla expects to sell more vehicles in China than it does in the US. And in case you don't keep up with Tesla news at all, the company built a factory in Shanghai that began delivering vehicles to Chinese customers late last year. Also, what was really good for Tesla is that they were allowed to operate as their own business in China when they opened their factory. What this means is that they were not required to share any intellectual property with the Chinese in order to manufacture their cars there. This is crucial because it gives them a huge competitive advantage over other electric car makers in China right now. If Tesla had been required to have a business partner in China, like every other American technology company does, then most likely their proprietary technology would have gotten stolen and would have been used against them somehow. So the fact that they got to retain their IP but still have access to the Chinese market is a huge advantage for them. Okay, the third catalyst for Tesla's huge stock run is their lead over the other car manufacturers, especially the legacy automakers such as Ford, GM, Honda, Toyota, and all of the others. In fact, a recent report from Nikkei Business Publications estimated that Tesla's autonomous driving chips are at least 6 years ahead of other established car manufacturers. Also, while current car manufacturers rely on a complicated web of suppliers for their cars' electronics, Tesla builds its chips in-house and has full control over their design. This puts Tesla very far ahead in terms of capitalizing on self-driving capabilities once that becomes a reality. Also, what is amazing is that all of Tesla's cars come with the hardware that will allow full self-driving sometime in the future. And with the Tesla's base Model 3 coming in at $33,000, it is only $2,000 more expensive than the Nissan Leaf. So why would anyone buy a Nissan Leaf when you could get a Model 3 for roughly the same price? Also, Tesla is investing heavily into battery technology right now and is making huge strides forward in the performance of their cars. In fact, Tesla is hosting its first ever battery day later this year, where it plans to unveil new battery technology that will allow its cars to get over 400 miles of range per charge and last up to 1 million miles, while at the same time lowering the cost. So these will be huge announcements for Tesla and will potentially make EVs viable for a lot more consumers. Something else you have to consider is the S-curve of innovation. If you are a business student, then you have probably seen this before. But basically, this is what it is. The first S-curve represents gasoline cars, and the second S-curve represents electric cars. For many years, gas cars have had tremendous growth, but now we are seeing that growth decline, and we are seeing the rise of a new technology, electric cars. And when old technology and new technology overlap, it is called the innovation window. What happens in the innovation window is that the old technology peaks and starts to decline, whereas the new technology begins to experience exponential growth. So the longer established automakers let Tesla gain market share, the further behind they will be once the EV market truly takes off. And they run the risk of not being able to successfully jump from the old technology S-curve to the new technology S-curve. And like I said, the new technology is not simply sticking a battery in a car and saying, we did it. But it is also about how good your battery is. Can your chips handle self-driving software? Do you have self-driving software? Can you manufacture enough batteries to actually keep up with demand? These are all challenges that Tesla is figuring out right now. So if sales of ICE cars drop off too fast, then automakers such as Ford or GM might not be able to keep up with Tesla and could go bankrupt or permanently lose market share and never recover. So the S-curve of innovation is something that is very real, and right now Tesla is on the right side of the S-curve, facing exponential growth. Meanwhile, the other automakers are still on the old S-curve, which is starting to decline. So I think the future is very bright for Tesla. And I think this is a car company that is here to stay and will continue to grow and gain market share for the foreseeable future. And if they can squeeze out a profit at the end of this quarter, I think the stock could hit $2,000 a share based on that news alone. So if you want to see some other videos I've made on Tesla stock, you can click one of those now. Also, let me know what you think in the comment section below. Do you think I'm right about Tesla stock, or am I starting to sound more like a Tesla fanboy? Also, hit that subscribe button if you aren't subscribed already, and I'll see you guys in the next one.